Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome to the White Rabbit Trading Channel. Let's see what we have. First of all, we're seeing a nice bounce on the quarterly time frame. This was one of the scenarios we were looking for, especially around this key area with the data-driven price levels. Historically, this is where bottoms tend to form. Now, of course, from a timing perspective, price is hitting these levels earlier than usual. Typically, we would expect something closer to an 80% drawdown. You can see it on the chart. In previous cycles, we saw a move up, followed by a deeper move down into those data price areas, usually aligning with that 80% drawdown. This time, however, we're only around 50%. That means we've reached these levels much earlier than expected. From top to bottom, it usually takes around 1 year, and this time it hasn't even been half of that. So clearly something is different from this perspective, and that's why many people are still bearish and expecting lower prices. But if we look at it from another angle, we can say, maybe this time we won't get an 80% drawdown. Maybe price already formed a bottom here and will either retest it later for a higher low or simply hold it. We don't know yet. The fact is, price has already reached these key areas. So either these levels hold and those expecting an 80% drawdown are wrong, or these levels break for the first time and we see something new on it. In both scenarios, it would be something new. So with that said, yes, time-wise, it's a bit early, but price-wise, we've already hit important levels. And even if price comes back down, I would expect these areas to hold, meaning either a later retest for a higher low, or in the worst case, the bottom forming somewhere around here. For now, we have a bounce, which is already a good sign. Now we just need to see if it can sustain. Looking back at the quarterly chart, we can define a few scenarios. These scenarios revolve around this bearish support resistance level. Scenario 1. We get a rejection from this area and move into a longer sideways range. That could mean a higher low or even a retest of the lows, but not significantly below the current data points, which are rising over time. Scenario 2. Price breaks above this level. In that case, we treat it as support and look for higher targets. Even then, a longer sideways phase is still possible. Price could break above and then range before continuing higher. So overall, rejection, longer range, possibly retesting the lower areas, breakout, range above, or continuation higher. And of course, this structure works both above and below the level. For now, I would like to see price actually reach that level. Once we're there, we can judge whether it gets rejected or reclaimed, and from that, decide whether to look for higher prices or expect more sideways movement. Only if local levels start to fail can we say that lower levels might get tested again, meaning more time spent in the lower part of the range. So everything depends on how price reacts at this level. Break above, bullish continuation, or range above, rejection, range below, or extended sideways phase. For now, price hasn't reached it yet, so we wait. But at the same time, we prepare for these scenarios. A longer sideways phase would actually fit well with the 4-year cycle bottom and the remaining data points. But if price reclaims that level, I'm not really expecting it to lose it again. In that case, I would expect higher prices, whether through continuation or a range that eventually resolves upward. So this area is a very important level for the higher time frame direction. Next chart. Let's take a look at what's happening with our EMA setup. Here we have an 88% probability based on historical data that whenever the 5 EMA crosses the 21 EMA while price is below the 55 EMA, price will eventually reach the 55 EMA. So far, we've seen the move up and price slightly missed that level by around 1%. Overall, still a very solid reaction, and the setup remains active. Of course, there is always a chance that it fails. In the past, when it failed, we either saw a longer sideways range without significant new lows, or, in some cases, a move to new lows. That would again fit with the quarterly scenario of extended sideways movement. For now, I would say, if the EMAs cross back down, it would indicate a failed setup. And especially if price closes back inside the range, I would start aiming for the lower part of the range again. Until that happens, the setup remains active. Now let's move on to the 5-day setup. Here we're looking at this simple setup. Whenever a 5-day candle closes above the EMA, we have the potential for a bigger move. Now, in most cases, it doesn't play out fully. As you can see, it only has about a 38% success rate. However, no major moves happen without this setup. That's why we use it as confluence. Personally, I use it to stay in trades longer. As long as this setup is active, I hold my positions. Right now, price remains above the EMA, so technically, we are still looking for higher prices, unless we see a 5-day candle closing below it. If that happens, the setup is invalidated, and we wait for the next one. The key level to watch at the moment is around 74,700. If price closes above that in the next 2 days, then we stay in the setup and continue observing the next candle. So for now, the setup is still active, targets remain higher, and timing-wise, this setup usually takes longer to play out in my end. That's what I'm focusing on here. If it fails, then we most likely see a move back down into the lower areas, meaning a longer range again. So you can see this is an important setup for the current situation. Next, we have the yearly fib time and price chart. I know it looks a bit chaotic with all the lines, but the main thing we care about here is when price meets time, and that will be around the start of the next month. Before that, we also have FOMC coming up. So what I'm watching here is the type of move we get into that timing window. As you remember, I mentioned in one of my previous videos that price is currently in a phase where it chooses a direction that often continues into the next yearly fib time. And for now, we are seeing that price is moving higher. But the important part is where price will be when that timing is actually hit. If price reaches that time window at resistance, then I'm clearly looking for short-term pullbacks and possible trades from there. If, on the other hand, price moves down into that timing window and hits support, then I would first look for a bounce. We can see that this aligns around day 5 of the new month. And if we look at the monthly statistics, we can see that in an uptrend, lows tend to form early in the month, highs tend to form around the second week though. That would be very strong confluence. Of course, the ideal scenario would be a retrace first, followed by a move up into that time window. That would give even better alignment. So if we do get a retrace into that timing window, I would definitely look for a trade there. Right now, price has already reached some key price levels, as you can see. But time-wise, we don't really have strong alignment yet. So for me, the best approach here is to wait and see where price is when we hit that timing window, and then make decisions from there. For now, price has held support and moved higher. Now we need to see if it becomes choppy around these areas. It's possible that I will avoid trading here and wait until the next month. Technically, price could continue higher into the next time frame, but I don't want to jump to conclusions too early. I'd rather wait for the timing to be hit. Next, let's take a look at the weekly chart with the 202-day cycle time window. Here we want to see price closing above this area. So far, we haven't had a close above it yet, but we already have a new higher high, so that's a good sign for now. If we do get a close above, then I'm aiming for higher prices into the next higher time frame levels. Maybe we see some short-term reaction around the 82K area, but overall, I would expect continuation toward the next major support resistance level. It's really just level-to-level trading. If one level holds and gets reclaimed, then we aim for the next one, unless price breaks back below. That's a very simple way to form a bias. For now, our job here is more or less done. We were watching this level ever since the breakdown, and this was the next area of interest, especially with the timing. This is exactly the kind of area where most people don't want to buy or go long, and now we see the bounce. The market rarely makes it easy because most people trade based on emotions, and that's why, unfortunately, many end up losing money. Even for me, mistakes can happen. I also traded the last range in a similar way. I applied the same logic as I'm doing here in this lower range. It didn't fully work out back then, but I had my reasons. The important part is I didn't lose because of emotions. I followed my plan. The only mistake I made there was not shorting, but everything else was based on technical reasoning and preparation. And it's the same approach here. Yes, there were some stop losses, but overall, this range was traded well, based on data, not emotions. So with that said, this chart still looks good so far. We just need that close above. As long as price doesn't close back below, I'm still looking for higher. Next chart, the CME chart. Here we are looking at the weekly time frame, and we have a few signals going on. First of all, near the lows we had a MACD cross, something we haven't seen for a while. That's usually a good sign for a potential bottom formation. Then we had volatility increasing and now slowing down inside this range, also a good sign. And on top of that, we have a bullish divergence on the weekly momentum, but all of this still needs confirmation. These tools are lagging, so we need price action to confirm the direction. And for that, we need to see levels being reclaimed, basically a shift into a local uptrend. Not a full macro uptrend yet, because for that, we would need to break of the 100K highs, but at least a strong local uptrend. Right now, what we see is that price moved below this range, got rejected, and is now reclaiming back inside. So for now, it looks like a deviation of the range, similar to what we saw on the upside before. As long as this area holds, technically we are back inside the range. That means the next target would be the mid-range, and then potentially higher levels. Momentum and the other tools support this view, as long as we don't see weakness. So this area on the CME chart is very important to watch on a weekly closing basis. If it holds, I'm looking for higher prices, which also aligns with the quarterly level and other higher time frame levels, basically the next major support resistance zone. Only if this level gets lost would I start looking for more range or even lower targets. If you want to keep it very simple, this chart gives you your bias. Weekly close below, doors open for lower levels. Weekly close above, we look for the next resistance levels. That's the simplest way to approach it. Just follow the higher time frame support and resistance. Now let's move on to the lower time frames and the local range. By the way, before I forget about the EMA setup, we are looking at the 3-day time frame with the cross and the target. Slowly but surely, other time frames are also starting to come close to a cross. For example, the 4-day time frame. Whenever we had a cross there, it always hit the 55 EMA. I couldn't really find failures on that one. Maybe you can check it as well, and let me know if you find something. But from what I've seen, the hit rate is very high. Of course, I'm not aiming for that yet, unless it actually confirms. For now, we need to wait, because the cross would only happen if this candle closes above roughly 83K. And at that point, the target would be around 85K or wherever the EMA is at that time. So we just keep observing. For now, we still have the 88% probability setup in play. And if the next time frame also crosses, then we get a new target again. You can see how we work our way through the market step by step, using tools and the data they provide. Anyway, for now, we wait and see how the 3-day plays out, and we'll revisit the next time frame in about 2 days. Now back to our range. For now, everything is going as planned. We have a breakout above the trend line, above the range high, and even a successful retest holding as support. Of course, these levels can be retested again. If that happens, I will look for a trade there, specifically around this support resistance level. Most likely, I'll consider both directions. If we get a clean retest, I look for longs. If price loses the level, I get stopped out and look for a short back to mid-range at least. So this is clearly an action area for me. I still have a long from there, and I would most likely look to add to that position on a retest. So step by step, this is an area of interest if price comes back down. Now to the upside. We have several levels. First of all, the last range low could act as a reaction point. Whether it rejects or not is another question, but it is a level to watch. Personally, I would prefer price to reach the next major area, somewhere in the mid-80s, around 85K to 90K. Basically testing the daily structure swing high. So for now, I'm not looking to short. If there is no weakness, I don't short. Only if price starts losing support will I consider shorts. And yes, some might say, but you're missing the move. And that's true, but I'm not interested in shorting every small rise like many people do. You can actually see it in the funding rates. People are constantly shorting into this move up. We see continuous short liquidations and new shorts coming in. I don't want to be that person. I always ask myself, what is the reason to short here? Price is above support, broke out, retested, and is holding. So why should I short? Is it fear of missing out because I missed some longs from lower levels? No, I was bullish there and took longs. Is it to catch the perfect entry and show it on social media? Also no, because what many people do is they short, get stopped out, short again, get stopped out, and then one trade finally works, and that's the one they show. That's not my plan. Here, you'll see real trades, not emotional reactions just to get attention or to catch perfect entries. So for me, the answer is simple. There is no reason to short right now. I'm fine missing part of the move and then shorting later when price actually loses support, a higher probability short. For now, I have no interest in shorts, and I don't really care what others say. In the end, I want to make money, not impress anyone. If both happen, great, but I won't force trades just for the sake of it. So, whenever you see someone posting a perfect short in a market like this, you can assume they've been shorting all the way up. And that one winning trade usually doesn't even recover their previous losses. It's a cycle many go through, and hopefully most people learn from it over time. For me, I don't care about moves like price dropped from 78K to 70K and I missed it. That's irrelevant. All I care about is the setup. And the setup is simple. Support, look for longs. If support breaks, look for lower margin. Everything in between doesn't matter. So for now, I'm looking for higher prices. That doesn't mean we can't retest these levels, but the key is how price reacts there. We already saw one retest, and now we have a higher high. So again, no interest in shorting for now. We just keep watching and let the longs run. Now let's switch to the next chart, the new indicator. Here we are looking at wave-based levels. It's actually quite simple. Level to level. If one level holds, we aim for the next one. The most important areas here are the mid zones. Right now, price is above them, and we have a short-term target ahead. This aligns very well with our current levels, especially the previous range high acting as support. If price loses this area, then we look for a move down to the next level, especially if we start closing daily candles below the last higher low, or more importantly, below the range high. If that happens, the door's open to test the lower part of the range again. Until then, we watch how price behaves around this area. If price keeps closing daily candles above it, still holding, look for higher locally. If we get daily closes below, look for a move back to the local lows. So to keep it simple, if 77K is lost on a daily close, I'm aiming for the next level around 75K to 74K. Simple and clean. Now, let's check the local levels and see if there's anything to do and where the averages are. So what do we have here based on today's averages? No significant new highs and no significant new lows, which basically means chop in between unless volatility starts to increase. We have a few important levels here. First of all, price is currently trading inside a daily order block, which is a support resistance level on its own. This order block has its own range. The upper part is the range high, the lower part is the range low. So for price to remain bullish, or at least range-bound, we need to see this level holding. Wicks to the downside are allowed. That means price can move down and test the support below. In our case, that's the 6-hour order block. The 6-hour time frame is currently trending up, so price could form a higher low there. Best case would be a clean higher low. An SFP of the lows would already be quite deep, because that would mean price is losing this daily order block range. So first, we look for a higher low. In this support area, we have the 6-hour order block, the previous local support resistance level, the Monday high, which acts as the base for the weekly candle. As long as price is above that, this is not bearish, and the weekly bias can remain upward. Wicks into that area are completely fine. However, if we start to see this level getting lost and turning into resistance, then price moves back inside the Monday range. That would be local weakness, and from there the door opens to lower levels, unless price quickly reverses, in which case we adapt again. But the core idea remains simple. Above, look for support and continuation. Below, look for the next levels. Below this area, we also have structure stops, so the next level down becomes even more interesting. Personally, I would pay close attention to the 73K low, but the easiest way to approach this is to keep structure intact. We want to see a higher low forming here and this area holding. Only if it gets lost do we look for lower prices. If that happens, I would look for the next trade around the lows. And from there, we repeat the same process. If it holds, look for a bounce. If it breaks, take the loss and look lower, potentially even shorting. So in this zone, I'm generally looking for longs. That doesn't mean I'm actively trading here right now. For me, it means waiting, but observing these levels as support until proven otherwise. At support, we look for higher, especially as long as price action is not showing weakness. And right now, there is no real weakness. This is just normal price behavior. Move up, retrace, hold support, form higher highs and higher lows. That's not bearish. Show me weakness, lose these levels. And then yes, we can look for lower prices and potential trades. But for now, I'm simply holding my longs for higher targets. My position already hit the next take profit yesterday, and I still have some runners left. So there's no need to rush anything. I want to take high-quality setups, not emotional trades that cost time and money. And worst case, just feed that FOMO mindset. With that said, I hope this was informative and you now know what to watch for. We'll come back to the chart in the next video. All the best, and see you in the next one.